The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
It's all about ETH today, and joining us now to discuss the crypto markets is Noah Hamman. He's CEO of asset manager AdvisorShares. Good morning, Noah.
Good morning.
So, of course, yes, ETH. We've had this massive rally. What do you think is? Is it really this enthusiasm about the merge, or are there other factors involved here? What's happening?
I think it's both probably that and just, across the board, crypto may be finding a bottom, right? We primarily are watching Bitcoin, but also watch ETH as well. And it feels like we're sort of in this pricing kind of trough, bouncing off, the bottom and then hitting up to the top. And obviously, over the last month, ETH has really been moving up significantly. But Bitcoin's trailing it as well. It's up about 10% probably over the week, 15% over the month, so not quite what ETH has done, but nonetheless, positive momentum, which is nice to see.
So you're looking at, you see a bright spot, particularly as we've seen the collapse of the likes of Celsius and 3AC and Voyager, et cetera. You see a positive, a silver lining in this dark cloud, which is basically the deleverage. Correct?
Yeah, the silver lining is it's still early days for crypto, right? And I always tell people I kind of look at crypto like, stocks in the early 1900s, before the Exchange Act, before the Securities Act, before the Investment Company Act of 1940. And so there'll be a lot of challenges, a lot of volatility. A lot of companies won't make it. It's an area probably in desperate need, for some regulatory oversight, especially for investors on these platforms. And I'm sure that's coming, hopefully in a favorable manner, though that works well for these cryptocurrency companies. But I think that's the silver lining, is that you need these kind of shakeouts. This volatility is not new to the crypto space and certainly not new for experienced investors in the space. But if you're a newer investor and you've been watching the price and sort of jumping in and not really having a plan on when you want to get in and when you want to get out, it's been incredibly challenging. And unfortunately, people have lost a lot of money along the way.
But what does the deleveraging, at least in the short term, mean for the markets?
Well, it does feel like that's bottoming out a little bit, but it does remain to be seen what else is going to happen. I know you guys were just talking about Celsius and, and their desires and their expectations, but they are also probably learning a lot about, the bankruptcy code and understanding that they might not be in control of their own destiny, as secure creditors will really start to drive what they want. And then they'll really understand the chaos of having a lot of different people with a lot of different agendas relative to trying to capture some value of what they invested, with them. So they've got a complicated road ahead. There's probably a lot to learn about who does have rights and covenants and agreements and things like that. And obviously there's a few other companies that are on that path as well, losing significant amounts of dollars. So I think we've got to see this play out. The court process will probably shed a lot of light on a lot of new details. So it'll be bumpy. But I think, that's just sort of bad headline news. That's the thing that's probably keeping new investors out of the space. Again, if you're an experienced investor and you've been in the crypto space for a while, again, you've seen this volatility and you've seen these kind of, maybe not exactly the same problems, but similar problems with companies and how they operate.
Now, I know you have a couple of ETFs at AdvisorShares, so I wonder if you're seeing any activity in terms of Bitcoin exposure from institutional investors. What kind of activity?
It's been slow. We launched a few months ago the ticker symbol CRYP. So it's a Bitcoin ETF, but what's unique about it is it's tactically managed. So it's actually run by Mark Yusko and the Morgan Creek team. And so we're designed to go, fully into Bitcoin or fully out of Bitcoin or somewhere in between. So it's a risk managed solution. And we felt like, that would be a unique offering, especially for newer investors. We mostly talk to financial advisors, self-directed investors. We have a broader, ETF lineup. And so these are the ones that are just kind of coming to the space, know that they want some exposure, but don't really know, how to navigate it, aren't really experienced in some of the volatility that they've seen. So CRYP becomes this easy to hold ETF that you can just hold in your brokerage account. that will manage it for you. And so, coming out of the gates, again, only, a few months old, I think we're already about 10% above the long only. We look at the ProShares BIDO ETF as a comparison. Now, granted, both are down significantly. I think since we have launched CRYP, BIDO's down about 44, almost 45%, and we're still down. We're down about 33, about 34%, but a 10% difference. And over the long term, if we can kind of cut those tails, right, using momentum, using trend following to make the adjustments, we can provide investors a better risk-adjusted return, certainly over the long term. So that's what makes CRYP very different from, your long-only Bitcoin type of exchange-traded funds.
So regulation has become an increasingly hot topic, especially given current volatility. What, in your view, is the most important regulation for the space?
That's a good question, because there's a bunch of different things, right? There's rules in our industry today about leverage that, because crypto and the companies that are investing in it or exchanges around it don't have the same type of regulations overseeing them. They can do a lot of things that brokerage firms can't do and banks can't do, but probably aren't, as we've seen, maybe the smartest things to do. So certainly things like leverage and asset coverage, right? Again, in the investment company industry, and the Investment Company Act speaks exactly to what mutual funds and exchange-traded funds can leverage. And so those types of rules are probably coming for the space. And then I think probably their biggest challenges will be certainly things that we do have to deal with in our industry around know your customer rules and things like that might be slightly counterintuitive to how the crypto market works. So I think that'll be the challenge, right? When you've got a few, and I want to be careful with the words. I was going to say bad actors, but maybe sometimes it's just actors in the space that don't understand the risks that they're taking, even the ones that are operating the business. Man, is it going to make it challenging for when these regulations come. There'll be some that'll be very favorable, and I think will work well in growing the industry. But I think there's some that are going to make it, quite a bit challenging.
Sorry, for the leverage point, because I think that's really important. We're hearing a lot about leverage these days. Specifically, what would that kind of regulation look like? I mean, what would it say, and who would it be? Who would it be focused on? Because a lot of the leverage problems, as I understand, are also like offshore entities. So I'm just curious, like in a broad way, how would that work? Like, what would it say, and who would it be targeted at? A leverage-based regulation.
Sure. And I'll speak more to the brokerage industry, which is what I'm more familiar with than, say, the banking industry, because the rules are definitely different and two different regulators overseeing them. So for us, relative to complying to SEC rules, there are things like, the asset test coverage that I mentioned, because there's products out there that have 2 times leverage or 3 times leverage. It's usually with a daily investment objective. But there is a rule that requires what they call 3 times asset coverage, right? So you have to have 3 assets in the fund for 1 liability. And that rule has been around for a long, long time. And so funds and exchange-traded funds, public products that have used leverage, have had to comply to that asset test. So it really limits the amount of leverage that you can take on. And it's in part why those strategies only run on a daily investment objective. They reset at the end of the day, reset that leverage, and have a reasonable expectation that they'll still be able to comply, through those rules throughout the day. I guess it depends on how volatile the category is that they're applying leverage to. So there's rules like that that are incredibly important. And then even now, the SEC's just recently passed a derivatives rule. So now they're not just looking at asset test coverage, they're looking at the volatility of the strategy. And based on, what they call a value at risk calculation, or a VAR calculation, the SEC is going to have rules that will allow you to only take on so much volatility when you're using derivatives and leverage in an investment strategy. And that's a newer rule just for the mutual fund and the exchange-traded fund industry. So those are the types of things that you'll probably see coming to the crypto market space for sure.